Keeping your head down and focusing on the U.S. consumer, is that going to be fruitful in this environment?
You know, Kelly, we've seen a lot of changes, obviously, over the last few months. And, the growth opportunity for investors clearly is temporarily being, disrupted. The consumer does remain strong in the U.S., but these higher inflation numbers are eating away at their purchasing power. So one really has to be careful to figure out where are the lower end of the income distribution consumers going to have to cut back. And by contrast, if you're looking for growth opportunities, you look towards where are firms spending. We saw, for example, Broadcom report last night. Excellent numbers, outstanding guidance, all on the back, partly, of enterprise spending continuing to grow because they deferred so many infotech investments for their infrastructure. And that's a great place to look. We've owned that stock for a long time. We see more appreciation there, and it provides a really nice dividend yield for those looking for some income, especially during these volatile times.
And talk about an under-the-radar story in the past 24 hours. That's barely going to get a mention. And again, that can kind of be an opportunity. You do have some obvious plays here. You would do cyber defense a little bit in that area, right?
Yeah, we've owned these for a long time. They serve a number of purposes. First of all, they're a bit of insurance in portfolios against just this kind of disruption in markets. But also they're secular growth opportunities. A smaller company like Kratos, for example, makes drones of the targeting and unmanned wingmen for flying alongside of piloted jets. They do a lot of work, obviously, for the government internationally as well as in the U.S. And they're obviously seeing a big lift here because drones are probably one of the biggest areas of increased defense spending around the world over the next several years.
You also have some plays, you mentioned income and inflation protection, where energy, banks, and real estate are kind of the go-to sectors there. I am surprised to see or appreciate seeing that you're looking in some names like PayPal for opportunistic ways to start moving on this big drop we've seen in tech. I mean, where else might you be sort of poking around for investors?
Kelly, there's a number of things that have happened since November, right? We saw that big tech sell-off in anticipation of a strong economic recovery and rising interest rates. That world has changed a little bit, and not just because of the Ukraine-Russia situation. People are starting to realize that growth is going to slow down. And so these sell-offs of these high multiple stocks, really did create opportunities. PayPal, for example, has this short-term headwind from eBay rolling off, but the underlying numbers are very strong. And we're seeing companies and consumers switch more towards digital payments around the world. PayPal is so well positioned for that. And we think it's a real opportunity here. And beyond PayPal, a company like Encino or Q2, also in that fintech space, really got hurt by the multiple contraction we've seen since November. So, looking beyond the current disruption, which is horrible, the U.S. economy does remain in a recovery mode. We saw that in the jobs numbers this morning. As an economist, I can tell you that there's a lot of good things going on in the U.S. economy that do give support to equities at this point in time. But, we're in a period of real disruption, a risk-off trade. You can see that in the 10-year Treasury. But at the back half of the year, we do expect a lot of these growth names to be the ones that outperform.